Are you earning money from Facebook or Instagram? Meta is now deducting 5% from your income. Watch this before your next payout. Why does this matter? If you earn money from Facebook, Instagram, Reels, or sponsored content, this applies to you. Even small creators are affected by this tax, so it's important to understand. So what is Meta income? Meta income is any income you earn from Facebook or Instagram. This includes ad revenue, Reels bonuses, or brand collaborations paid through Meta. All of this counts as taxable income in Kenya. What has changed? On November 20th, 2025, Meta announced a 5% withholding tax. Deductions officially began in December 2025, and this applies to all Kenyan content creators earning from Meta. What is withholding tax? Withholding tax means tax is deducted at the source. Basically, it's taken before the money reaches your bank account. So Meta sets this money straight to Kenya Revenue Authority as it is a requirement based on the Income Tax Act. So this is a simplified example of how the 5% withholding works. For example, if you earn 100,000 shillings from Meta, 5% of that is 5,000 shillings. So it is deducted by Meta before they pay you. So you receive 95,000 shillings in your account, and the 5,000 shillings goes straight to Kenya Revenue Authority. It is that simple and automatic. Someone may ask, is this final tax? No. The 5% withholding tax is not your final tax. It acts just as an advance tax paid to Kenya Revenue Authority. So when you file your tax return for the year, you declare your full Meta income and then indicate the 5% already withheld, which is offset from your tax payable. So you will see whether you need to pay extra tax or not after that. Who does this apply to? This applies to all Kenyan residents earning through Meta, that is the content creators, influencers, and individuals. Even if Meta pays you in US dollars, this tax still applies. So what basically should creators do? You should track all your Meta payouts, download payment statements, keep proper records, and declare your income when filing your returns. Staying organized is the easiest way to avoid surprises at the tax time. A key reminder, digital income is real income, and real income is taxable. Understand it, track it, and stay compliant to avoid penalties or extra tax later. Here is a bonus tip for you. Keep 18's receipts and proof of all expenses related to your content creation. For example, cameras, microphones, lighting, software, internet, or electricity. Deducting these reduces your taxable income, helping you to avoid paying more tax than necessary. If you don't have an idea what are 18 receipts, I've done a video on that and you can refer to my videos and check it out so that you can have an understanding of what I mean. And that is a wrap. So creators, keep creating and stay tax smart. Please share, like, subscribe, and you can WhatsApp us for inquiries. The number is in the description below. Thank you for watching and see you on my next video.